Good morning, Wall Street winners. It is Monday, September the 8th, and there's a bit of a disconnect in the market right now, in my opinion. And I'm going to speak to that in this video. And it has to do with not only picking the right sector, which might be technology or financials, around where the market narrative is. So that's the first important, call it 50,000 foot view perspective, the macro view of the markets is figuring out the sector that's going to move forward at the greatest pace. Um, or at least not going to fall at the greatest pace. And then within that sector, finding the stocks that are outperformers in the sector. So if we scroll down to technology for a minute, technology has had an incredible run over the last 20 years, really, with some ups and downs. But one of the biggest disconnects in this space for me today is some of the valuations, which is the price to earnings ratio, the price you pay for future earnings from some of these technology companies. And when we get into the tech sector, let's further subdivide into smaller tech sectors. So you've got social media and video, Facebook, Meta, Google for YouTube, TikTok, obviously not publicly traded. You've got, but owned by a publicly traded company, Chinese. You've got others in that space like Instagram, owned by Facebook Meta, and then you've got Snapchat, et cetera, et cetera. That would be one sector. Let's look at semiconductors. So AVGO, which is Broadcom, came out with incredible results last quarter. Not really that much more incredible than NVIDIA's. But look at the price to earnings on this company. It's 90, almost 91 times. We'll round down 90 times price to earnings for NVIDIA. That is a pretty high price to earnings ratio, but maybe justified because of the growth. Then we go down and we look at another company that is obviously the market leader, NVIDIA, and NVIDIA's price to earnings is half of that. So if both companies are growing at a similar pace, and the one company owns the majority of the AI chips being sold in the AI market right now, which is growing at a very fast pace and will likely continue to through to at least the end of 2026, based on orders and forecasts that are already in place. It seems like NVIDIA is on sale relative to Broadcom. Then you look at TSM, which does the majority of the manufacturing for these companies, 27 times price to earnings, half of that of NVIDIA, and a third of that basically of Broadcom. This is an absolute steal in my mind. And this pays a dividend of 1.37%. Now, 1.37% is a small amount of money in terms of a percentage, or it's a small percentage, but it still gives you a guaranteed dividend. And you've got a relatively low price to earnings. Now, we pop out of semiconductors for a minute and have a look at Google, which has spiked in the last week because it basically won the antitrust case, and that's been taken off the table. It's even lower than TSM at 25.3 times price to earnings. These are the companies I would encourage you to look at because they're doing very well. They're market leaders. They're generating a tremendous amount of cash. They're profitable and they will continue to go up. They may pull back temporarily. Those are great times to buy them. Good luck in your trades today. If you like the videos, hit the like and subscribe button.